Welcome to the Fear and Greed Business News Afternoon Report for Wednesday, the 15th of May, 2024. I'm Sean Aylmer. Every afternoon, we've got the 5 stories that happened today that you need to know about. Story number 1, the S&P ASX 200 closed up nearly 0.5% today to 7,754 points, led higher by the materials sector and healthcare stocks, while industrials lagged. BHP led the market higher, up 2.2%, while CSL was up 1.2%. Both Rio Tinto and Fortescue Metals Group rose around 1%, while Telstra was another strong performer. The banks weren't so good. ANZ, Westpac, National Australia Bank, they all ended lower. So too Transurban, Macquarie Group, Woodside Energy and James Hardie Industries. In corporate news, commercial radio and regional television company Southern Cross Austereo has rejected ARN Media's bid for the company. That's the revised bid after PE Group Anchorage Capital pulled out. And the Australian agricultural company's share price dropped about 2% after it announced a full-year loss on the back of a challenging 12 months and lower cattle prices. Story number 2, the day after the budget, much of the discussion is about how last night affects different sectors. One sector considered a winner from all the cost of living initiatives announced by Treasurer Jim Chalmers is the consumer discretionary stocks, analysts said, especially those who cater to lower socioeconomic groups. Places like Domino's Super Retail Group and Collins Foods, which owns KFC. More money for housing investment should help the companies that make homes and manufacture products for homes. Think Brickworks, Reece, those sorts of companies. Then there were others that could be hurt. The doubling of the visa application fee for international students has the potential to hurt companies like IDP Education, according to UBS. Story number 3, I just mentioned IDP Education being hurt by the budget, but it has benefited from being included in the MSCI Global Small Cap Index. Its share price jumped 7% today, the best of the top 200, on the news that it was going to be included in the MSCI Global Small Caps. IDP, along with marine and offshore service company MMA Offshore, fleet management and leasing group SG Fleet, gold and copper explorer WA1 Resources, and buy now, pay later group Zip, will be included in the index. It takes a bit of explaining this. The MSCI Global Small Cap Index includes about 4,100 companies from 23 developed markets. It's considered the benchmark of small company indices. Passive investors, like exchange-traded funds, try and mimic the MSCI Global Small Cap Index. So if IDP or MMA or any of those are a part of that index, demand for their shares should rise. However, some ASX-listed companies have been dumped from the MSCI Index. Pro Medicus is one, so too Australian Clinical Labs and Tyro Payments. Story number 4, CSR's aluminium operations have fallen to an annual loss of $29 million because of high energy costs, posing a challenge for French giant Saint-Gobain, which is poised to become CSR's new owner. Saint-Gobain is undertaking a $4.3 billion buyout of CSR. CSR has a 25% stake in Tomago aluminium smelter in New South Wales, which has been a drag on the overall results for the building products company for decades, according to the Financial Review. Electricity costs aren't helping at the moment in particular. CSR, which makes gyprock plasterboard, PGH bricks and pavers, Monia roof tiles, Hebel lightweight building blocks and Bradford insulation, reported a 6% rise in net profit after tax for the 12 months ending March 31 today. Shareholders will vote on the Saint-Gobain $9 per share offer next month. CSR shares were flat today, trading just under that offer price. In story number 5, Beijing is considering buying millions and millions of unsold homes from across the country in an effort to kickstart the all-important property market in China. It would certainly be ambitious, and the idea is to clear some of the excess housing stock. Smaller programs across the country have worked, but this one is much more ambitious, according to Bloomberg. Local state-owned enterprises would be asked to help purchase unsold homes from distressed developers at steep discounts using loans provided by state banks. Many of the properties would then be converted into affordable housing. Officials are still debating details of the plan and its feasibility. It could take months to finalise if China's leaders decide to go ahead. That's it for the afternoon report for Wednesday, the 15th of May, 2024. Don't forget to hit follow on the podcast and find Fear and Greed on LinkedIn, Instagram, X, TikTok and Facebook. Join Michael Thompson and I tomorrow morning for the Fast 5 by Fear and Greed. The top 5 business stories you need to know in just 5 minutes. I'm Sean Aylmer. Enjoy your evening.